Hi there, and welcome to Petty Cash. Well, first, let's start to explain what petty cash really is. Petty cash is the small amounts of money a business holds on hand to pay for minor expenditures. The operation of a petty cash fund involves the following of three activities: establishing the fund, making payments from the fund, and replenishing the fund. But first, let's understand the idea of establishing a petty cash fund. Firstly, when a petty cash fund is established, it is done by writing a check for the amount of the fund and then cashing the check and placing the cash under the care of an employee. A journal entry must be made for this transaction. For example, a petty cash fund of $100 would be like this. During the period of a petty cash fund, certain payments will be made, and this is where the second activity is introduced. These payments are qualified in one out of two ways. The first being cash is taken from the fund to make a payment, for example, stationery supplies, or employees seek reimbursement from the fund for payments they have personally made. However, regardless of which case, a receipt is necessary for any payment. But lastly, an important rule must be understood. As payments are made from the petty cash fund, no journal entries are made yet. Journal entries will be only recorded when the fund is replenished. Lastly, the final function of the petty cash fund is the replenishing of the fund. Whilst replenishing the funds, the business first records all the accrued expenses made throughout the period of the petty cash fund. Finally, when all expenses are accounted for, the business writes and cashes a check for the amount that brings the total back to the original balance. However, in some certain cases, payments can sometimes not be accounted for. So if there is a discrepancy between the cash needed for the replenishment of the fund, the discrepancy is charged to an account called cash over and short, which in this case, the cash requested to replenish the fund is $87, however the total amount of receipts is $85. Cash over and short is a temporary account. When a business is cash short, it is put into a debit balance, which increases expenses, and when a business is cash over, it is put into a credit balance, which decreases the expenses. So in this case, the business is cash short and a total of $2 will be needed to be debited as cash short so the account can balance. Guys, I hope this screencast gave a clear understanding of what a petty cash fund is and what is included in the activities of creating one, maintaining one, and replenishing one. Thank you so much for watching.
Created using Powtoon.